All right, let's jump right in. And we're going to be looking again at adjusting entries, except in this lesson, we're going to have a stronger focus on prepaid expenses. So before we do that, I'd encourage you to pause the video at this point and try and answer these 4 questions as a review. Having now had a chance to pause the video, let's go through what these answers are. What is the basis of accounting that follows gaps? Well, it's not the cash basis of accounting. That one is based strictly on when cash is exchanging hands. It is the accrual basis of accounting. What are the 4 types of adjusting entries? Well, they would be that little table that I had in the last lesson, which would be prepaid expenses, unearned revenue, accrued expenses. What gaps does the accrual basis of accounting follow? Well, it's revenue recognition and matching. We're trying to match those revenues when they're actually earned, and we're matching the expenses when to the revenues that they do in fact earn along with them. What are the pros of adjusting entries? Well, more accurate financial statements. So there in fact are the answers for you. Let's continue in. Just as a quick review, this is exactly what I was talking about with the table. We've got prepaid expenses or things. These on the left side are about work that hasn't been done yet but has been paid for. So for example, you end up paying a utility bill but you haven't yet actually had that service, or paying for something like insurance. So for you prepaid this amount, and on the insurance side it's an unearned revenue until the time actually passes. On the right side here, these accruals represent where work has been done but hasn't been paid yet. So we're jumping right into prepaid expenses in this lesson. And well, let's just start by listing some prepaid expense accounts. You could do your best. Come up with a few. See if there's any ideas which you can come up with on things that would be prepaid. All right. Car insurance, utility bills, prepaid rent, sometimes taxes is paid in advance. So these are all examples of things that we may pay in advance. I mean, I suppose you could even put tuition on there if you're a student, but all quite good things. But insurance is definitely one of those things which you pay for in advance. I mean, you can't just go back in time and say, okay, well, I've crashed my car, and now I need to try and pay for the insurance after the fact. Doesn't work that way. You have to pay for insurance beforehand. All right, so here's some examples that we're going to try and work through. And as we go through these examples, I encourage you to pause the video, work through them, spend maybe roughly 2 to 6 minutes on each one. If you're really getting it and you already get the answers and move right on, perfectly fine. It says you probably understand the material. If you're struggling with it, try and look through. You'll have explanations to go. So pause at this moment. Try and do it yourself. Having now had a chance to pause the video, our job in this one is to journalize both the original entries and the adjusting entries. So we've got car insurance is $2,400 is paid for the year on September 1st with the accounting period of 1 month. And this 1 month is telling us that in fact we're going to have to adjust for this amount. The car insurance is paid at the beginning, September 1st, and we're going to have an adjusting entry at the end of September. 6 months rent worth $7,200 is paid September 4th for the office building for a period ending December 31st. Let's just start with this first one. Insurance is paid for 1 year. This is what we call we're paying it in advance, so there's a prepaid account. So prepaid insurance would be debited $2,400. But what do we credit? Well, we're crediting bank because bank is, well, we're paying it at that point. Now at the end of September, September 30th is when we're going to be making our adjustment. Let's just see what this looks like visually. So our prepaid car insurance gets paid $2,400, and at the end, we credit bank. There we go. Car insurance is paid for the year. But when we go to do the adjustment, we can't just expense all of this. At the end of September, September 30th, we only have to expense 1 month. So how exactly do we do that? Well, we can try and look at this as a rate. If we have $2,400 in 1 year, there's 12 months in a year, which works out to $200 a month. And since we're only looking at 1 month of insurance, that is in fact where we get our number from. And this is where we can actually start to match up those expenses. Car insurance expense is $200, prepaid insurance then decreases because right up here, by the time we get to the end of the 1 year, we want this balance to go back to zero. So this was a debit, that means this becomes a credit. It reduces this account to $2,200. And each month, so for example at October 31st, this account will go down by $200 again. So it's actually going to be the same entry, October 31st, November 30th. At the end of each month, it will be the same. So second part here, 6 months of rent where $7,200 is paid September 4th. So we're going to have the prepaid rent on September 4th is going to be one of them. It's going to be $7,200. And we have for the office billing for a period ending December 31st. Well, this gets a little bit more tricky. How many months between September and December 31st? September, October, November, December. There's going to be 4 months. Well, let's just think before we get there, what's the first entry? Well, we've got prepaid rent, $7,200. We've got bank, which is going to be credited $7,200. That'll be the first one. With 4 months of this gone, that means that we'll be expensing 4 out of 12 of this. Let's just go see what our calculations turn out to be. There's our prepaid rent, $7,200. Bank, $7,200. Rent paid for 6 months. This is not really that typical. But here's the numbers and calculation down below. Monthly rent works out to being, well, $7,200 divided by 6 months. That's $1,200 a month. And we've got 4 months, as we already said before, which works out to $4,800. So what exactly do we do for our expense? We have a prepaid rent expense, which is $4,800. And we've got prepaid rent. So this is where we basically recognize and saying, yeah, we've in fact incurred those expenses. There's our expense which we get to put in, and we decrease our prepaid rent by $4,800. And we always notice that prepaid rent is debited here, it's credited here to adjust what has been used. So generally speaking, there's different types of what we call amortization or depreciation methods. And one of the ones that we're kind of looking at here is straight line. The allocation of the cost of a long-lived asset or fixed asset or long-term asset, whatever you want to call it, to expense over their useful lives. And we use what we call a straight line amortization method for these ones where we're taking the cost divided by its useful life. And there are other methods which we will be exploring in later units called declining balance, units of activity, and there's also other things out there in the tax world like double declining balance and so on. So let's go ahead and take a look at the next one. So I'd encourage you again to pause the video, read through this, and see if you can do this on your own. We're calculating the supplies expense for the year, and we're going to journalize the adjusting entry. The way this works, we know that we started with $3,000 of supplies January 1st. We purchased $5,000, and then at the very end of the year, we see these inventory is actually $1,000. And oftentimes you'll see big box stores with people going around with their little machines to double check inventory. They're actually doing a physical inventory count because they're trying to do these kind of adjustments on the books, except here we're talking about supplies, not inventory. So how much was actually used? Well, we had 3,000, we added 5,000, so at the peak this supplies account was at 8,000, but at the end of the year it's only got $1,000 left. So how much was used? 3,000 plus 5,000 minus 1,000 is $7,000, which gets expensed. So what's our adjusting entry going to be? Well, at the end of the year, we're going to have our supplies expense 7,000, and our supplies will decrease 7,000. And this is again to adjust for supplies being used. Remember, we're not doing this on a daily basis. It would take too much time to try and account for these small, minute details of an eraser or pencil going missing or being used. So this is why we adjust things at the end of the year or at the end of a period. Amortization example. Well, a pump is purchased on account from Deere September 5th for a gold mine which costs $5,000. It's expected to last 5 years before it will no longer operate. Journalize the initial purchase and the adjustment on September 30th. Unfortunately, I've already got some numbers up here. Again, I'd encourage you to pause at this point and see if you can do this on your own. So what are we going to do with this? And there are some very common mistakes that do come up. Let's just start with the very first one, the initial purchase. It does say right here, a pump is purchased on account. And the moment that we see on account, this to me signals that it's an account payable. And we've got pump. So pump gets debited $5,000, and accounts payable dash Deere should be credited 5,000. Let's check it out. There's our first one. Yay, I got it right. Okay, so here's our amortization calculations. How much are we going to be expensing at the end of the month? Well, it would be $5,000, and within 5 years, 5 times 12 is 60 months, which means that the total expense for each month will be $83.33. Where do we go from here? Well, a lot of people would say, well, we've got depreciation expense, and then we're going to go pump as a credit. And that is incorrect. And there's something called a contra account. And that's why most people will end up putting pump into the credits. It's not. So what is correct? Pump expense, that's okay. But instead, we want to track or accumulate this amortization and track this account on how much we have depreciated, so we can calculate what we call the net book value of an asset. So we're still using 83.33, but this allows us to track how much an asset is actually worth over time. So like I said, contra account, what exactly is it? Just a quick review. It's an account that is offset against or deducted from a related account on the income statement or balance sheet. So it's the opposite side. So when I talk about an asset, the contra account to this asset, that pump, would have been the accumulated depreciation of that pump. And it is considered to be a credit balance. That's why it's a contra. It's on the opposite side. And the net book value is the value of the asset minus its accumulated depreciation. So if I were to go back here and after 1 month, the net book value would then be 5,000 minus this 83.33. Whatever that works out to be, 4,000 something. It would be close to 4,800 and something. And that's it. If you ever have any questions, reach out to me. I know I've gone through this pretty quickly, but the more time you spend on practicing, the better you will get at this, and the more exposure and experience you have, the better you will get at this. Again, if you have any questions, reach out to me, and I'd be happy to answer them. Cheers for now.